Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. In yesterday's video, I broke down what my current portfolio looks like for February of 2020. And during that video, I spent 4 hours planning, editing, and finally uploading that video. And it took that entire time for me to realize I didn't end up talking about Snapchat yesterday. And I had posted it this morning, and I was just like, how could I possibly have missed that? I wrote down all these notes for what I wanted to talk about, but I never talked about it. So that's what this video is about. Yesterday, earnings came out for Snapchat and they missed a little bit, and the market did not like it and pushed the stock down. At one point it was 14%, and now it looks like it's hovering around 11%. So in this video, I'm going to be discussing what the earnings mean for the longevity of the company, talk about how I reacted to the earnings, and then talk about what my plans for the upcoming weeks will be. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. All right, so since I broke down and took notes on Snapchat for what I wanted to say in yesterday's video, also if you missed that, I'll throw that up right now. I thought I'd break down what I saw in the company. And when I made that video yesterday, it was my best performing stock besides Bitcoin, up around 12%. And it was up 4% during the day today, and then obviously gave most of that back in after hours. So I'm still up a little bit, which is kind of surprising. Anytime you see a move that's in double digits, you expect to be negative. But since it had a very nice January, I'm still positive in my trade. Snapchat was a company that I broke down on this channel, and before I broke it down, I had no intention of ever taking a position in it. However, when I looked at a lot of the fundamentals associated with the company, I was really impressed with the numbers I saw. And they just blew me away about how nice everything looked. And as a result, I took a position a couple weeks later. Breaking down the fundamentals, I loved everything I saw. Just one thing that I was looking for is I want to see them go profitable for the first time. They've gotten kind of close. They've been trending in the right direction. However, they're still negative by around $250 million. They're still taking a net loss every quarter, but I'm hoping that by the end of 2020, they can go positive. So that's my goal for the year. From its time when it IPO'd, it pushed up a little bit and then just tanked and ended up settling down around $5. 2019 was an incredible year for the company where it had over 100% gains, and I'm looking for 2020 to continue that trend. So now let's talk about the earnings and the numbers that were released today for their Q4 of 2019. The first number that they released today was their earnings per share was 3 cents compared to the estimated 1 cent. So they beat market expectations on that. However, revenue is the area where it really hurt them. Last quarter, they had $461 million of revenue, which is slightly below the $563 million that was expected of them. So it's less than 1% that they missed. However, the number that was really standing out to people is the fact that they widened their net losses for the quarter. They beat the market expectations on daily average users up to 218 million compared to the 215 that was expected of them. And then their ARPU, they slightly missed. ARPU means average revenue per user. It was slightly below market expectations, but sitting just below $2.60 per user, I think it's still pretty impressive. So now those are just a bunch of numbers. Let's talk about what it means overall. And the first thing I want to talk about is the earnings per share, which is the first time since Q4 of 2017 that the company has produced a positive earnings per share. And I think that's a really big deal. It may not be overall profitability, but I think it's a trend in the right direction. When I saw that 3 cents per share, I was really impressed. They've hovered around it for a couple times, but they've only broken above it one time since it's IPO'd. And getting above that even mark, I think is a very big deal. Even though it's not that big of a change from what was expected, I think mentally, I think it's a big number to pass. So as I mentioned, the number that really stood out to the stock market was the fact that they widened their net losses from this quarter compared to Q3 of 2019. And people don't like when tech companies are going further away from profitability. If you take a little bit of a step back and you look at a longer time frame, they reduced their amount of net loss by 29% in 2019 alone. They're sitting above 300 million at the beginning of 2019, and now they're up at 250. It is above what they had in Q3, but I still think the trend is in the right direction. Besides the earnings per share being positive for the first time since Q4 of 2017, the number that really stood out to me is that they beat expectations of their average daily users at 218 million, which is just an incredible number. In my original video, I talked about Snapchat. This was the number that kind of pushed me towards taking a position in the company. And the fact that they're beating expectations, I think is really impressive. When I throw up graphics on The amount of increase in daily average users between the regions, you can see how impressive it's been in 2019. 17% growth in their daily average users, I think, is very impressive. I was expecting somewhere around 10%, but 17 is beating my expectations. However, if you break it down by region, the growth has not been seen in the US or Europe, but it's really been seen in other parts of the world. From all the articles that I've read, the 36% rest of the world growth has been mainly attributed to India, which I think if they can break into that market, will push them in the right direction towards profitability. In contrast, when you look at average revenue per daily user, it went way up in the United States and Europe, but they've really struggled to really tap into that rest of the world market. A 23% overall increase year over year is really nice to see. However, seeing that they've only increased by 9% for the rest of the world compared to the 30+% in Europe and the United States has me a little worried right now. If they can show that they can tap into this market and really siphon some more money out of there, I think that's going to be the deciding factor on whether or not they can become overall profitable. Part of the explanation that I saw for this incredible increase in rest of the world growth has been attributed to the fact that they remade their Android app, which is, Android is very popular in other parts of the world. So the fact that they've shown an interest in fixing part of their platform, I think is a good sign going forward. However, as I mentioned, they need to tap more money out of this market. I talked on this channel how important it is for when a company releases earnings that you not just look at the numbers, you actually listen to what the CEO or the CFO, depending who's talking, has to say about the upcoming future. For a company like Starbucks, which is one that I hold in my portfolio, they beat numbers, they beat their expectations, but they talked about how they were worried about financial 2020 as a result of coronavirus. And so the fact that their numbers for the last quarter were great was overshadowed by the fact that they're worried about their 2020. And I think investors didn't pay enough attention to how positive the CEO was talking about the company. Every quote that I saw from the CEO from today looked like they were very positive about 2020 as a whole, and that gives me a lot of hope as an investor that just lost 10% after hours today. I think based off of everything I've seen, I'm still going to be steady in my position. I love the fact that their daily average users numbers have increased by so much in this past year. I'm not super worried about the fact that they went slightly backwards in their quest to profitability, and I love the fact that they had earnings per share in the positive range for the first time since Q4 of 2017. All these factors make me feel a little more confident after seeing this massive drop today. So the next question is, what's my plan going forward? And kind of the options I'm looking at are either holding steady or I'm looking to increase my position size. I mentioned the fact that I am still positive overall in my position, and I'd be happy adding at the price that I entered in. When I made my January 2020 video, I talked about the reason why my position size in Snapchat was pretty small, and that was the fact that since it increased by over 100% in 2019, I was expecting there would be a little bit of choppy trading, maybe a little bit of a pullback. And so as a result, I wanted to take a smaller position size to kind of protect my account. Now I've seen that 2020 has been very good to Snapchat. The market has been pushing it up, and before today, it was my second best performing stock in my portfolio. And the fact that this huge hit from earnings has still left me positive makes me pretty confident to add to my position. As I talked about on this channel, after you have this big news event like this, I think it's important to let things settle for a little bit. You might wake up tomorrow morning, take a position right as the bell opens, and then the market decides, maybe we didn't react enough to that. Or people that did not have a chance to sell yesterday sell in the morning, and it might push the stock further. So after a big news event like this with earnings or some just major news event that doesn't come out on a schedule, I highly recommend taking a couple days and just letting things settle. Wait until you can get more information and wait until the stock price action kind of comes back to normal terms. Relating to getting things back to normal terms, another option I'm taking a look at, see what I said there? I'm going to take a look at the options market for Snapchat. This is something that I've been trying to get into for a long time, and since I've made the move out of Robinhood, which is a video I'm still planning on making, I'm trying to be a little more creative with this video, it's something that I'm really taking a look at. When options get closer to earnings, the IV or the implicit volatility increases, meaning that the premium that you have to pay to buy or sell an option increases. And normally after the earnings, the volatility drops, and it's called the IV crush following earnings. And so when you look at earnings right now, I'll put up on the screen what earnings look like on Robinhood right now, just because it gives a good indication of the percentage moves just from today and the option prices. And I'm expecting the next couple of days are going to go back to normal levels. It would be ridiculous to buy options at this current price. When option prices are this high, buying options is a horrible idea. This is a great time to be selling options if you can do a covered call or a covered put, but buying calls or puts is a horrible idea right now. The IV pushes the price of these options super high and it's not worth it. So I'm gonna be waiting a couple days, and it's either gonna be I'm gonna add to my position if I see kind of some support being drawn after this earnings kind of settle, or depending on how low the options prices go, I may consider buying a call. I am still very bullish on this company overall, and I wanna be a part of the upcoming future. In all the stocks in my portfolio, I think that Snapchat has the highest upside, besides Bitcoin, of course, because I think that's going to the moon, and I think it's going to 100,000. Not this year, but I'm gonna guess in around 5 years. But I think based off of the track record that it's had, the 100% growth it had in 2019, the fact that it's still below its IPO price means that the sky is the limit for Snapchat, and that's why I want to be a part of it for the long term. So at this point, I'm kind of weighing all my options, trying to see what's the best decision for me going forward. I'm trying to minimize risk and kind of increase my position size on Snapchat overall. I think these Snapchat earnings are a great example of why I hate earnings so much. It's so ridiculous. Snapchat puts out these earnings, the report, and everything looks great, except for the fact that they widened their net losses and the market just freaks out. They overlook all of the good things that were mentioned in the call, things that were said by the CEO, and some of the really impressive numbers like the increase in daily average users. So buying after earnings are one of my favorite things to do. I think on average the market overreacts to news events like this, and I think it's a great buying opportunity. So I'm going to be waiting for the dust to settle, and then I'm going to be likely taking my position at the end of this week or early next week. So let me know what you think about Snapchat overall. Do you think it's something that you wouldn't really touch at this point after you saw how the earnings reacted today? Or do you think this is a great discount for buying a company that has fantastic upside? Let me know in the comment section down below. If you missed yesterday's video where I talked about my current stock portfolio, I'll throw that up again right now, and you can find that as my most recent video. Thanks for watching this episode. If there's a company or an idea you'd like me to go over in a future episode, please leave it in the comment section down below, and I'll get to it as soon as I can. Thanks for watching this video, and I really appreciate all the support.